Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the dollar, gold, and miners. So the dollar bulls saw a recovery today. We had a big time pullback day on Thursday, recovering some of those losses, not all of them. It's an inside candlestick. We did close up near the high of the day, but we'll look at it here on the hourly in just a moment. Still keeping an eye on this bearish reversal head and shoulders pattern to see if it's going to play out. If we do break the recent high of 101.76, this will be negated, and I will disregard that pattern, but I won't disregard this neckline of support, which is a double low of consolidation at 99.43. That's going to be important from here on out. But watching to see how much recovery the bulls have here, if we zoom into the hourly time frame, we can see it's not that significant compared to the pullback we've seen so far. We did see a higher low and a higher high coming off of oversold levels, but we have plenty of resistances left. I'm looking at 101.05. Remember that 101.02 resistance? That was certainly a very tough resistance in the past, and that is going to act as resistance yet again. So 101.05, then looking up at 101.15, 101.25, and then our recent high of 101.76. So the bulls are in control of the short term. They still have a very key resistance level at 101.02. If they can't get over those low 101s, we will pull back. And in terms of support, I'm looking down here at 153, and then the low that we hit of 141. So the bulls are in control short term, key resistance approaching, and we'll see if the bulls are able to get through that level. Checking in on gold. Gold is still strong. We have this uptrend line still intact. We did see a red day today. It is a bit concerning for the bulls just because it is a double top. And we already had that double top of 1244.71, 1244.46, and now we topped out at 1243.78. So a lower high by $1, and we can see this uptrend support line is here. It wouldn't be a big red flag for the gold bulls unless we broke this low. And that low was 1216.80. Because we have a clear higher low pattern, and if that were to break, then we break that higher low pattern. So even if we break this uptrend support line, not the end of the world. It is not game over for the bulls. We still have that level to be watching. And again, I use these trend lines as a bit of a heads up, but it's the price action that I care about more. So the bulls need to get that follow through and see higher highs before breaking 1216.80 support. So let's look at it. Let's look at these on some weekly time frames. The dollar looks the same, that head and shoulders on the daily and the weekly. But in terms of gold, we're stalling out a little doji of indecision. And a doji at the top of an uptrend oftentimes is associated with a bearish reversal candlestick. So we do need to be cautious. If we do see a red week next week, we could be looking at the break of that higher low pattern. And we also need to be aware that we are coming from a pretty significant downtrend on the weekly time frame. We can draw all kinds of downtrend resistance lines here. That's where I would put the major one on the weekly. So we're not up yet to encountering that level. That's up in the 1280s right now and not really a factor, but just be aware that we are pulling back from the longer term uptrend. We have been in a downtrend now for about 7 months. So looking at the miners, we had a bearish day on the miners, almost a red Marabozu where the bears controlled the entirety of the day. There's a couple things we need to be watching out for. Number one, the bearish MACD cross that has already occurred, but it's the bearish TCG cross, and that's when the 4-period exponential moving average crosses the 8-period to the downside. Since we had our bullish break, and since that gold turned 10-day moving average into support and we went bullish, we have not seen a bearish cross here of these moving averages, and we are on the verge. If we see another red day on Tuesday and another move to the downside, and we can pretty much utilize this middle Bollinger Band. If we lose the daily middle Bollinger Band, we're going to see a bearish TCG cross, which has not happened on this bounce. That would be a red flag for the bulls. As of right now, it is still normal, healthy consolidation. We still have our low of consolidation intact of 24.50. We've got a couple resistance levels, 24.60, 24.98, and 24.86. But it's normal and healthy consolidation at this point. So I would not be alarmed as a bull unless we lose the middle Bollinger Band support and see a new low of this consolidation below 24.50. The weekly time frame shows that little pullback this week, breaking the higher low pattern on the weekly time frame. But we could also be forming a bull flag here on the weekly time frame. We could pull back another 2 weeks, and as long as it's contained here on the weekly time frame, that is absolutely the potential for a bull flag where we have a big breakout to the upside, looking for a couple weeks of consolidation before continuation. So I'm going to be watching for the potential of bull flags on the weekly. For GDXJ, similar story. We have a little bit more wiggle room before that bearish TCG cross. The middle Bollinger Band has a little bit more catching up to do, and you can see we're just starting to see that bearish MACD cross. So the junior miners have been a bit stronger, potentially due to the correlation to silver. Silver has been stronger than gold. The low of consolidation, the bulls want to hold 40.26. As long as that level holds, the bulls are just fine on this consolidation. Looking on the weekly time frame, the higher low pattern on the weekly is still intact. We have an indecision doji and an inside candlestick as things are getting tight, and the Bollinger Bands are tight as well. The bulls need to see these Bollinger Bands begin to level out and ascend, but that's going to take a couple weeks to occur, so we might be in for some sideways trading unless we see a full-on breakout above those levels, which certainly is not likely, but it is possible. So that's what we're looking at for the miners. As long as they hold the low of their consolidation currently, they will remain in control, but we need to be aware of those TCG crosses of those exponential moving averages. That's a bearish signal if the 4-period crosses the 8-period to the downside. So in order to break the low of that recent consolidation, I would say that gold would have to see a break. Let's see where we were standing roughly when that occurred. I would say that gold would have to see a break back down below 12. Let's see. I would say we'd have to drop down to the low 1220s to see that occur. So we do still have support. We are breaking the higher low uptrend, which obviously the bulls would like to hold here on the hourly time frame. Next support is 1231.90, and watching this uptrend support line on that daily time frame that I drew. So we got a lot to be keeping an eye on, most notably the dollar and gold. And we're watching to see that tight range on the daily time frame for gold between this uptrend support line and the little double top of resistance, tighter and tighter within that range. And of course the dollar and that potential bearish reversal head and shoulders pattern, and also watching the dollar and the low 101s resistance that is going to be tested in the near term future. So we'll check back in as always Tuesday, and I actually don't know off the top of my head if we are going to be trading on Monday. I assume we will, but if we are, I will come check back in on Monday as well. So I appreciate you watching. See you soon.